Are you looking to take your personal finances to the next level? Well, you're in the right place. Welcome to the Monday Money Tip Podcast, presented by I Was Broke, Now I'm Not, with your host, Joseph Sangle.
Well, welcome to the Monday Money Tip Podcast, presented by I Was Broke, Now I'm Not. My name is Joseph Sangle, and I am joined, as always, by my co-host, Megan Hibbert. Are you fired up?
I am.
It is Monday.
Welcome to Monday.
We're getting ready in the season of Inferno in South Carolina. That's the 5th season, in case you don't know it, when we get this big solar blast. It's called a sun.
It's hot.
And the orb makes things basically catch on fire. It's unbelievable down here. And for a kid who grew up in the Midwest, it's just an exorbitant amount of heat. But fall is around the corner. Some of you may be in the upper reaches of our listening audience. You're probably feeling the first tinges of fall.
That's weird.
In the morning.
Crazy.
And I'm jealous. But in the meantime, we're talking about Monday, and we're talking about money. Money on Monday. And we're going to talk about a very interesting topic today. What are we going to talk about?
So today we're talking about how to build or rebuild your credit. So the question is, my credit is really bad. Can you please share some ways I can improve it?
Yes, we can, as a matter of fact. And on episode number 112, it is your lucky day. We're going to answer that question for you. 112 episodes down, 112 to go. Let's go. We want to talk about a couple things first, though. And one of them is our featured resource. This month's featured resource is the I Was Broke, Now I'm Not online study. It's online. Instantly access the 6 sessions and receive a copy of I Was Broke, Now I'm Not, the book, for only $20. And it comes with free shipping to U.S. destinations. This study is extremely practical, action-oriented, and biblically based. You'll be inspired to take charge of your finances, all from the comfort of your home. You can do this as a virtual study with a group or do it individually. Just visit iwasbrokenowimnot.com/online or just the initials iwbnin.com/online to learn more and get your copy. Are you fired up about that?
Oh, yeah.
All right. Now I'm fired up about this next section. It's my favorite. It's the current money events section. Let's go.
Now it's time to get caught up with our current money events.
This portion of the podcast is sponsored by I Was Broke, Now I'm Not. Take your finances to the next level by utilizing our financial tools and calculators. Visit iwb.com/tools, where you'll find budget templates, debt freedom date calculators, retirement calculators, investment calculators. They're all right there at your fingertips, and they're all free.
That's right. iwbnin.com stands for I Was Broke, Now I'm Not.com. You can Google it. I was broke, now I'm not. And we want to help you say that. I was broke, past tense, instead of saying I is broke, which means you fail grammar class, and it's not fun saying I is broke. For today's current money events section, I'm talking about credit lending. As we've all been doing since the pandemic busted out. I hate how it busted out. We've been talking about coronavirus-related stuff, and credit lending has absolutely been affected by the pandemic. In an effort to mitigate risk, several major credit issuers have lowered the limits on some consumer accounts, and other issuers halted or reduced their zero-interest balance transfer offers. So, Megan, tell everybody how these big four have adjusted it. So Chase has done what?
So Chase is cutting existing limits.
Yes. So if you had a $2,000 limit, they may have cut it in half to $1,000. If you had a $5,000 limit, they may have cut it $3,500. Okay. Yep. Discover. What have they done?
Discover is lowering limits on new accounts.
Okay. So if you had longer credit history, maybe they haven't reduced it. But if you're a newer customer, they've been hacking it. Synchrony. Yep. So Synchrony used to be part of GE Capital. They're their own thing now. And what have they done?
They're dynamically lowering or raising limits on some accounts.
So they're dynamically doing this, which means we're making adjustments daily. Yikes.
That is yikes.
And American Express?
They're no longer offering introductory 0% APR balance transfers.
Yeah, and we've noticed that a lot of the lenders have really kind of lowered that. And so issuers can lower credit card limits anytime they like. That's not good. The only requirement is that they notify affected cardholders via letter at least 45 days in advance of an impending change. And balance transfer offers are typically introductory, meaning they're made available to new customers as an enticement to open an account. An issuer can choose to change or stop new card member offers anytime they like, which means they can't change the terms if you've already signed up for an 18-month 0%, but they can say, you know what, we're only going to offer 6 months 0% or not offer them at all, as American Express has done. But reduced credit limits and a scarcity of balance transfer offers ultimately hurt consumers who are relying on these methods as a cushion during trying economic times.
Right.
Think about it. For those who have lost their jobs or seen their wages cut, a credit line may help bridge the gap between paychecks. Of course, we're trying to teach you here at I Was Broke, Now I'm Not in the Monday Money Tip podcast to not have to do that. That's why we want to build margin and have cash for this. But some people use them as lifelines. It's not a good lifeline. And for those, a reduction in available credit also reduces purchasing power at a time when someone may need it most. And guess what? When your credit limit is adjusted down, your percent of available credit utilized goes up, and that dings your credit score. You didn't do anything. Is that crazy?
That is crazy.
So we really want to help you with this. And so it's important for you to think about this. If you have a credit card and you have a balance and you're working hard to get that paid off, here's one more reason why you should not carry a balance month to month, why you should pay it off every single month if you choose to have a credit card. Because it's going to affect your credit score. It's going to affect a lot of things that are totally out of your control. And what happens if you put all that credit on there and things like pandemics happen time to time and they can nuke your credit score without you really having changed anything. So we really want you to prosper. And that's something we wanted to talk about. Be paying attention to this, folks. This stuff is happening whether you pay attention to it or not. It's going to be much better if you pay attention to it. Yeah. So that's our update for the current money event section.
All right, our success story today, we are sharing a word of encouragement from a husband and wife. So it's Daniel and DeeDee, and we recently shared on our social media. You can find it if you want. I'll include a link. It's called 10 Steps That You Can Take Right Now. So it's super helpful if you need help knowing what should I do in this situation. I'm in a season of I need some help. I need to save some money. I need to do X, Y, and Z. So it helps those who are impacted financially by everything happening in 2020. So they wrote us and they said, I feel like I'm in a financial Super Bowl and the score isn't in my favor. On the bright side, the game isn't over, and reading articles like these allow me to improvise, overcome, and adapt. So stay in the game, still time to adjust and win with these things. Continue learning, listening, and applying these gold nuggets of wisdom that financial coaches are sharing with us. The game's not over. We will win, as always. Thanks, Joe.
That's awesome, Daniel and DeeDee. That is incredible. Thanks for sharing that. And one of the things I would just say is it is a game, and I will remind you of Tom Brady against the Atlanta Falcons. As many people in our region know, they were down a record amount in the Super Bowl, except for one thing. The Atlanta Falcons forgot that Tom Brady was still on the other side. Yeah. And that dude came out, and he was committed and had the will to win, and he stole that Super Bowl trophy right from under them. And so the game is not over, and you will win. Stay persevering. Way to go, Daniel and DeeDee. Thanks for sharing.
Okay, so now to our featured question. We're talking about your credit score. So my credit score is really bad. Can you help share some ways I can improve it?
Absolutely.
Yes.
And so, this is one of the most common questions that we're asked. When we travel the road, it's how do I build my credit? How do I rebuild my credit? And, there's various ways that one can build credit while still winning with money. And part one, so let's share with everybody what part one is.
Yeah, so before we start, part one is you need to understand your credit score.
That's right. So do you know how credit scores are calculated? Podcast listener today, Bueller, anybody? Do you know how your credit score is calculated? Now, there's different ways that it's calculated. The most popular way that is calculated is something called the FICO score, which stands for Fair Isaac and Company back in the day. And the FICO score is the most reliable one. And it's an assessment of an individual's credit worthiness. Now, a credit score impacts many things. It determines whether or not you can get a loan. If you qualify for a loan, the credit score dictates what types of terms you can get. The better the credit score, generally, the better the interest rates are for you. It also affects insurability for auto, renters, homeowners insurance. It directly impacts the insurance cost, the insurance premium. I have seen insurance premiums doubled as a result of bad credit. It also affects the ability of somebody to obtain a cell phone contract, an apartment lease. It affects utility connections. Utility providers usually require a deposit from people who have low credit scores. And if you have good credit, like I have, it's waived entirely. I've had that many times. So credit scores can even impact your ability to obtain a job. And military personnel have been denied or lost security clearances due to their bad credit.
That's wild.
That's crazy. So here's how credit is calculated. So read off the things on how credit scores are calculated.
Yep. So there is a type of credit. So there are 2 types of credit: installment, which is car payment, house payment, or revolving, which is credit card and a line of credit.
So the way I like to explain this is installment is where you're paying something off. And when it's gone, the debt is gone and you own it. The revolving is you can keep going and reborrowing the money. So one of them, you get a yes one time, the loan for the car, you pay it off, but to get that amount of money again, you have to get approved again.
Yeah.
A revolving on a credit card, if you've been approved for a $2,000 balance and you have $1,000 borrowed, you can go borrow the other $1,000. If pay off the $1,000, pay off $2,000, you can go get $2,000 in. Nobody has to say yes again. You have the credit card.
All
Okay,
right.
that's type of credit is part 1.
Yep. So the next one is total available credit. So this is the total of all credit limits.
That's right. So how much could you go get without, that you're approved for right now? So it's really the addition of all your revolving credit limits plus what you owe right now on installment credit.
Yep.
Okay.
All right. The next one is total credit utilized.
So this is how much you've actually borrowed of it. So if you have a $2,000 credit limit and you've only borrowed $100 of it, that's only 5% credit utilization. The lower that amount, the better. Okay?
Next one is length of credit relationship.
So I want to explain that real quick. The total credit utilization really matters because that utilization, obviously, if you've used 100% of your credit, if you have a $2,000 limit and you've used all of it, that's telling the creditor, hey, this person uses every dime we'll give them. They're not very good at handling their debt. And if we gave them another $1,000, they'd probably borrow it too.
Right.
So the lower, the better. Generally, you want to keep it less than 30% utilization. And obviously, 0% would be great. But you said length of credit relationship. So the longer the credit relationship, the better. And that's why when you shut off a credit card account and you cut it off completely, that can harm you.
Yeah.
Okay?
All right. The next one is payment timeliness.
Now, this is files into when I was a kid, they would say when something was very obvious, they'd say, well, no duh, Mr. Obvious, right? They would say no duh. Did they ever say that when you were a kid?
Yep.
Well, no duh. It's like obvious. It speaks for itself. So you got to pay your bills on time.
Yep. All right. The next one is request for credit made for potential purchases.
Right. So every time you do a hard pull of your credit, it's called a hard pull. You sit in front of the person trying to finance a car. You apply for a credit card. You apply for credit at a furniture store. That is a hard pull of credit. If you're refinancing a house, every time you go to apply. So if you go to 3 places and all 3, they will all do hard pulls. All 3 will ding you. Okay.
I used to hate. So I worked at Banana Republic when I just finished college, and I used to hate it because they push you really hard to get people to get the credit card. And I mean, it has great rewards, whatever. But as somebody that knew that this is going to ding somebody's credit, it was like killing me every time because I knew the ones that are eager to do it are probably the ones that shouldn't be doing it. You know what I'm saying?
Yeah.
And so it just my conscience couldn't handle it. So I never won the top credit card because I just couldn't push it.
And you're at Banana Republic.
Yeah.
Things were not $4.
No.
That was awesome.
Yeah. All right. The last
That's
one.
news. I did not know that you worked there. That's great.
I did. I worked 2 jobs after college. All right. So the last one is public records.
Yes. And so this is if you have any outstanding judgments against you, for example, you had a cell phone contract. You hated the cell phone contract. You couldn't get out of it. So you just left them anyhow. And then they sent you the $300 bill saying you owe this and you didn't pay it.
Yeah.
And you kept ignoring them. They eventually enter it as a judgment and that will ding you. And that's a real big deal. So how do you understand what your credit score is and all that stuff? Is the first thing is part 2. So once you understand your credit score, what do you got to do?
Yep. So the next thing is monitor your credit score.
That's right. So you got to monitor your credit score. Now, here's the fact. You could be a millionaire and have a terrible credit score. Did you know that?
Because you don't have a lot of debt.
That's right, because you have no debt. So notice all those things we just listed, all the things that we just listed that are, the type of credit, the total available credit, how much of it you utilize, the length of the credit relationship, payment timeliness, request for credit, and public records. None of those say how much money is in the bank. None of those say how much real estate do you own, how many businesses do you own, how much money is in the pillow and the jar that you buried in the yard. None of this says that.
So what would you say to that person?
So what I would say to that person is that really it's kind of a weird name. A credit score should be more like a debt management score.
Yeah.
Or a debt facilitation score. That's a better understanding of what is actually happening here. It is a measurement of your ability to handle well debt relationships when you owe other people. Okay? So while a great credit score is more desirable than having a terrible credit score, I would not sit here and judge who I am by my credit score.
Yeah.
I have a very good credit score. But let me tell you something. That's not how I deem who I am. And I've went to a lot of places and people are like, I'm a 450 or I have a 521. And I'm like, okay, let's help you rebuild it. And I always want to understand why. Why do you want to have a great credit score? If they say it's because I want to be able to buy my first house, then I'm like, thumbs up.
Yeah.
If it's say I want to go finance a car, I'm talking to them saying, hey, that car is going to drop in value by like a rock. It's very important for you to think about that. Can you pay cash for that type of thing?
Yeah.
And so I really want you to monitor your credit score. And it is important to do this because it's estimated that 80% of credit reports have at least one error on them. And there's great ways to monitor your credit score these days. Of course, you can check out your credit report, which talks about all your lending relationships at annualcreditreport.com. That is the free website mandated by the federal government that gives you free, fair, and unfettered access to your 3 credit reports from the big 3, TransUnion, Equifax, and Experian. Those are the big 3. And you can get them at least once a year. Some states allow you to get your report twice a year. Now, listen, that won't give you your credit score. They'll try to sell you the credit score for like $6 or $8. Don't do that. If you have a credit card that you manage well, like, for instance, a Citi card, you can get your free credit score, the FICO score, every month. Discover advertises that they will let you see it every month. So however you choose to monitor your credit score, there's also good websites that have a good estimate, like creditsesame.com and creditkarma.com. And what it allows you to do is make sure that all your personal information is accurate. They have the right birth date, name, address, social security number. Are all your credit accounts being reported? Are there any late or missed payments that you remember making on time, but they've been misreported? What are some other things that they should check out, Megan?
Yeah. So are there any late or missed payments listed that you remember making on time? And are there any accounts or applications for credit that you do not recognize? And then the last one, are there any items from decades ago still appearing on your report?
So that the second one you mentioned there, are there any accounts or applications for credit you do not recognize? That's fraud, right? Things you didn't do. And then are there any items from a long time ago that still appear there, that, from a financial ditch that you went into? Many times this is related to divorce, and the decree didn't really specifically say that your name's removed from it, and then your former spouse went and didn't pay it, and now it's banging your credit up as well. So if you identify any mistakes, you can dispute them. And the back of your credit report says how you can dispute them. And if you dispute them and they can't prove that they exist, then they will most likely be removed. Okay? So as you are working to rebuild your credit, it is important for you to have a budget and not spend more than you plan. And then as you budget and you have certain things that you plan to spend money for. So I'm going to give an example of clothing. You're going to buy X amount of stuff in clothes for your kids, for example, or for yourself. You've planned the exact amount. So part number 3 of building your credit or rebuilding your credit is to do what?
Part number 3 is to swipe purchases and immediately pay off.
That's right. So you don't want to get in the habit of running up the balance and then paying minimum payments and paying a lot of interest. That's not a good financial plan. No one says, I became a millionaire and I owe it all to my credit cards. No one. You will not make progress even at 15% interest, which is low on most credit cards these days. We see 27.99%, 24.99% all the time. Okay? So here's what you can do. Ensure that small purchase that you make, you can have it processed on your card, and then pull the money that you had already planned in your budget and go pay it online through your app. Just so once you purchase it, go home that day or the next day, pay it off.
Yeah.
And always keep that balance at exactly zero. And you can do this once a month or twice a month. Some people use this for gas. I encourage you to do it on something that you can control yourself and you will not impulsively buy. If you can't control yourself at the clothing store, let's use it for gas.
Yeah.
Probably not going to impulsively buy gas. Do you impulsively buy gas?
Not you.
Have you ever done that?
Never.
Oh my goodness, it's $1.69, which is unbelievable.
Yeah.
Like I want to have barrels of it. But what am I going to do? Pour it in my trunk? Like for real. I do have 25 gallons that I can get at my farm with all my various gas. And the reason I have that is because I've forgotten the gas can, showed up, and I bought another one, and I bought another one. But you know what? Like you're not going to impulsively buy that. And if you do this every single month, and you have that rhythm, you're going to see your credit card soar. Why? Because you're using the credit. Your credit utilization is at zero, basically. Mm-hmm. Your payment timeliness is fantastic. Nothing can be late if you pay it immediately. And you're doing this on a consistent basis, which means they're probably going to start to expand your credit limit, which means you have an even larger credit limit, smaller credit utilization, longer relationship with the creditor. And as a result, you'll start to see your credit score start to soar. Okay? So here's the note. What is the big note?
Yes. If you do not trust yourself with a credit card and controlling your spending using a written monthly spending plan, aka a budget, then do not use this method.
That's right. Because there's a lot of people who have big credit card balances because they couldn't trust themselves and they used it anyway.
Yeah.
That's not rebuilding your credit. That's destroying your financial future. And so I encourage you to do this. Make sure that you swipe the purchase, but then immediately pay it off. Yep. That will start to build and rebuild your credit. And in general, in about 3 months, it starts getting better. In 6 months, a lot better. Okay, part 4.
All right, part 4, pay all bills on time and consider automatic bill pay.
That's right. So you got to pay your bills on time. You just got to do it. And we really want you to consider automatic bill payment. Now, automatic bill payment, the number one reason, we say this on the podcast all the time, the number one reason why people do not pay their bills on time and why they won't automate them is because they haven't achieved rung 2 on the ladder, which is to have 1 month's worth of expenses saved up.
They're afraid of overdraft.
They're afraid of overdraft. Now, the government sent some money to a whole bunch of people. Hopefully, you put it in savings. Any way that you can get money in savings, you need to have that margin because margin allows you to stay focused on the mission that you have for your life and allows you to automate bill payments. And that makes sure that at least the minimum payment should be automated. Because if I had to choose between paying everything off, but I'm paying it off late, or paying a minimum payment on time and paying some interest, I'm going to pay it on time and pay a little bit of interest. Because the one is decimating to your credit score, paying it late. Okay? So you don't want to be delinquent. And one of the things that I would really encourage you to think about is if you live an exceptionally busy life, which who doesn't, and if you're notorious for procrastination, you know who you are, automating the payments helps so much because I've met with so many people who have more than enough money to pay everything on time, but they're procrastinating, they're artists, and, they come in, they turn on the light switch, the lights don't come on, they're confused. And then they realize they didn't pay their the light bill.
Oh, gosh.
Not because they didn't have the money, it's just they didn't automate it.
Yeah.
And it just makes life simpler. Now, I would encourage you, as you look at your credit reports and you see old debts that haven't been addressed, you've got to address them. And so I encourage you, whether you settle with them or you pay them in full, you've got to communicate with them. Start the conversation because until you clean those up, it'll be hard for you to rebuild your credit. And if you have questions about that, you can send us the specifics of the old debts that you're facing at info@iwb9.com. We'd be happy to help you, or you can just share your situation with a private message on Facebook, and we'll be able to help you navigate those conversations with your creditors. Absolutely no cost to have that conversation with us. We don't sell anything other than books and some training stuff. And so there won't be a sales pitch, I promise you. We're here to help you get this stuff cleaned up so that you can rebuild your credit so you can go live a fully funded life. Tell everybody what part number 5 is.
All right. Part 5 is reduce the amount of debt you owe.
Yes. And so we're going to finish with this, and that is reduce the amount of debt you owe. The amount of credit that you utilize has an effect on your credit score. And so using a high balance indicates to lenders that you're struggling and you might not be able to pay it back. So if you think about it, credit utilization, they say, this is what is shared by Fair Isaac and Company, that it accounts for about 20 to 30% of your total credit score. So about almost a third. So a quarter to a third of it. So here's some things you might consider doing to help you manage. and help you pay off your debt.
Yep. Okay. The first one is ask your card issuer for a credit limit increase.
Okay. So this is important. So if you can request a credit limit increase, this doesn't mean you keep purchasing till you run it up to the higher limit. This is a simple trick to lower your utilization rate. Okay.
That's good.
So just for asking, you can increase it. Hey, if you have a $5,000 balance or credit limit and you ask for an increase and they increase it to $6,000, well, all of a sudden, that affects you greatly. Instead, if you have a $1,000 balance on a $5,000, that's 20%. It drops it down to less than 16% if you have that balance without doing anything.
Yeah.
And then you can pay your credit card bills more than once, which we just said. And by paying it more than once per month helps ensure that your credit usage is lower when it's reported to the credit bureau. And if you have credit card debt, then maybe the step for you is to stop using it for a bit, just for a bit, until you get that balance reduced to zero. We have a debt freedom date calculator on our website, and we encourage using the debt snowball. We have about a 6-minute YouTube video. It's our most popular video ever, showing how to use the debt snowball to eliminate debt from your life. And by doing that, when you reduce the amount of debt you owe on mortgages, credit card limits, any type of credit issued by a furniture store, anywhere, then it lowers your credit utilization. And of course, over time, your duration of the credit relationship extends, and you pay on time, and you clean up that old stuff. Guess what's going to happen? Your credit score is going to soar. And many people ask, what is a good credit score? Well, anything in the 700s is good. Above 720 is very good. You get above 800, it is fine and excellent. And if you have above 840, you're in rarefied air as far as credit scores are. And so we hope that this has been helpful for you. We do have an ebook that kind of outlines a lot of what we shared here today. And I think that ebook is available for what through our store?
$2.99.
$2.99. So 299 pennies. You can get that and kind of work through a kind of a checklist for yourself to say, am I doing all the things necessary to help me get my credit score back up to where I know it should be and where you deserve for it to be? Do you have any last things you'd like to share before we move on?
Well, I just have a question. So what would you say in like 60 seconds to the high school graduating senior or college graduating senior that is starting out on their journey?
Yep.
How do they even begin to start building their credit score?
So anybody who goes to college is going to get assaulted with credit card offers.
Sure.
They'll give you some free stuff if you fill out this credit card application. So fill out one. Don't fill out all of them like I did. Fill out one and use it with a budget, with a plan, and choose to put one thing on it per month and pay it off every month. And what did you do? What did you do?
I have to remember back to the day.
Well, I want you to think about it while I share what I did. I applied for all of them, which was a lot of them, which was like 10 hard pulls on my credit, which was non-existent. One of them was brave enough to send me a credit card. They just sent it to me. And the next day I practiced with it. I did not pay it off. I paid the minimum payment, and I had that credit card balance for about 8 years.
Yeah.
And I paid a lot of interest. And I remember meeting a young man. I'm going to say he's young. He's about 35. And he told me that he was so broke, he was still paying off the original Nintendo.
Oh, gosh.
Because he had financed it on a credit card, and he still had not paid off that credit card 17 years later or so. Yikes. Did you remember with your credit card?
Well, I think my biggest thing was like consistency. So continuing to pay on time, and like you're saying, like one of those steps was, the continually paying it off, making sure you're building good habits.
Yeah.
And so I think that's one of the big things is making sure you're building good habits, making sure you're developing those things because they're going to stay with you in the long haul.
Absolutely.
So whatever you're doing now potentially could stay with you for the rest of your life.
That's it.
So.
I mean, you get a college schedule, a college curriculum, when you're going to be this class, when this class is over, right? Why not build in that one habit that says, this is the date, this is the time of each month that I'm going to sit down and I'm going to plan out all my spending for the next month. And this is the date that I'm going to write all of my bills.
Yeah.
And some people, I know one member of our team has Money Mondays. And that's the date that he sits down with his wife and they talk about their bills and they pay their bills. And at the end of the day, they high five and they're done with it.
Yeah.
And so we really wanted to just share a special verse that really has spoke to us a lot through the years, through all of our podcasts. And what is that from Proverbs 22:7?
Proverbs 22:7 says, "The rich rule over the poor, and the borrower is slave to the lender."
And I think it's such a great reminder. The borrower is slave to the lender. We're in the coronavirus pandemic. Lots of borrowers are finding out that they're slave to the lender. They never really understood it before. They know it clearly now.
Yeah.
And we pray that that's not you. If it is you, keep listening to these advice, and it will help you navigate this challenge and help you thrive in the future.
Yep. So our next episode, we're going to talk about understanding opportunity cost. So whenever we want to buy something, we usually understand the financial requirements for obtaining it. So the price, the terms, etc. However, if we're not careful, we don't consider the overall implications a particular purchase has on our ability to accomplish our other financial goals. It's called opportunity cost. And we're going to dive into it next week right here on the Monday Money Tip podcast.
Yep, I'm going to get my economics nerd hat on. It's going to be so great.
Yeah.
I loved macro and microeconomics. This is microeconomic principle that we're going to be talking about. Hey, if you like today's episode, please help us get this podcast so other people get benefit. You can do it by quickly rating our podcast, leaving a review. These ratings and reviews help us make our podcast better for our listeners, help others discover it. If you're watching on YouTube, you can click the subscribe button, hit the little bell. It'll remind you every time a new episode is released every Monday morning. And if you liked it, give us a thumbs up. If you hate it, give us a thumbs down. Leave a comment either way, telling us why you liked it or why you hated it. In the meantime, have a great Monday and get fired up. Do something today to make your credit better. We'll talk to you next Monday.
Thanks so much for listening to this episode of the Monday Money Tip Podcast, presented by I Was Broke, Now I'm Not. If you enjoyed today's episode, please leave a review and subscribe. And for more great content and to stay up to date, visit iwbnin.com. We'll catch you next time.